There's a raft of information in the LAT trading tools suite. What I want to do now is just have a walk through and see how we can piece this together into one robust and coherent trade idea. We're going to follow this through from initial concept right the way through to trade execution. We'll focus predominantly on the trading suite, but we'll also piece together some of the technical analysis what you may do to then turn that idea into an actionable trade. So let's start where we'd normally start each day, and that's with the news feed. Of course, remember institutional grade news feed here, filtering out and providing you with only the most important headlines but a market moving that you really need to be paying attention to. And what we're trying to ascertain in here is what's the general dynamic of the market at the moment? Are we leaning towards a more risk on market flows or risk off? And of course, all focus at the moment to the conflict in the Middle East and what's going on with Iran, the US, and Israel. Now we can see here down the left side, big warning signs here. Headlines just appearing out the news squawk feed here saying an Iranian diplomatic source stated on the 23rd that preparations for talks between Iran and the United States and Pakistan may see a breakthrough tonight or tomorrow. So that's a fantastically positive thing. That's a de-escalation in the conflict. It's a movement towards what we want to see, and very much puts us in a risk-on environment. Now that's also supported. We come back in time, back towards the start of the day. Useful little recap and always worth getting your teeth stuck into is just the start of the US session. So we've got this daily US opening news. You'll have this each and every day, and it will give you a rundown of what's happening in the major, globally, what's going on, what are the major headlines, and of course you can break that down into the more specific sources. Okay, so the general theme for out here at the moment is leaning towards a slightly more risk on and a more positive environment. And with that, traders looking to move into some of those risk assets. Okay, those risk assets, the likes of indices, and then in the currency space, of course, we have the Australian dollar and Kiwi. So focus after this and seeing this more risk on environment is going to lean me towards looking for opportunities perhaps in the Australian dollar. So there's one area that I want to focus on. I also want to recognize areas where we might see some weakness. Now, inflation expectations are higher off the back of higher oil prices, and economy that leans very heavily and is a net importer of oil is the Eurozone. Okay, so higher oil prices off the back of the conflict is going to put inflationary pressure, which is going to on the Eurozone, which is then going to impact the ECB and central bank to take a more hawkish tilt. So a de-escalation in this conflict is going to allow the Australian dollar to strengthen with risk on flows and could also drive some weakness in the euro as rate expectations hikes start to come down with lower energy prices taking the pressure away from the ECB to raise interest rates. So the news feed here has given me a focus and an area on charts that I might want to go and trade. I want to try and validate that opinion with some of the other tools within here. Now let's start with the interest rate tracker. Let's come first and foremost to the RBA. The RBA here are showing the likelihood of 2 interest rate hikes into the end of the year. Now they are already trading with rates at 4%, so significantly higher than the other central banks, as you can see down the list here. So they're a very hawkish central bank. See a 78% probability of an interest rate hike. And you can see market pricing right now, the current expectations, that white line is above a week ago. So we're seeing traders this week reprice a more aggressive and a more hawkish RBA, which should drive additional strength into the Australian dollar. Comparatively, with the ECB, interest rates here at 2%, that does give them further room to raise interest rates should they wish. However, at the moment, they're pricing a 97% chance of a hold, with potential similar to the RBA for 2 interest rate hikes into year end. But comparatively, that would get rates to 2.5% versus the 4.5% in Australia. We can also see that traders currently pricing some of those, or the aggression of that is being priced out. You see that current line just going flat relative to a week ago. So comparatively to the Aussie, a slightly more dovish stance from the ECB here. So that supports the argument for Eurozone weakness paired against that RBA hawkish strength. So the interest rate tracker here confirming that opinion, but short Euro Aussie potentially has some scope. Now, if we come across to the City Surprise Index, City Surprise Index, as we've said in our previous videos, doesn't have any link to the overall health and strength of that data. It's comparing what's generally going on at the moment, and is that data surprising versus the analyst forecast. So we can see at the top of the list here, the Aussie is consistently beating against the analyst forecast. It's catching markets off guard, and it's surprising with data to the upside. Now, if we catch markets offside and the data is consistently coming in above forecast, the market is going to reprice that strength and reprice, therefore, the more hawkish RBA. So the Aussie data here looking particularly strong comparatively to the Eurozone area, which is consistently missing on its expectations. Okay, down here at negative 22.8. So we've got a clear differential here, divergence, where the Aussie data is beating on consensus, the Euro area is missing on consensus. If we were looking to trade sterling Aussie right now, that would be a slightly more difficult trade because both of them are beating on expectations, and in an arm wrestle, they're both going to be equally as strong. Now, if we come down to this grid reference here, we can see the 28 major and minor currencies. I can come to Euro Aussie, and I'll load this up. You can see we've got a differential here of minus 51, and the bias in here is sell Euro Aussie. Okay, so that's supporting the argument for looking to go short. So we've got really nice news feed at the moment flowing through, showing us that risk on environment, de-escalation in the conflict. We've got central banks pricing for a more hawkish RBA and a weaker ECB. We've got the City Surprise Index, which is showing us that positivity coming into Australia and that weakness that keeps filtering in day by day into the Eurozone. Okay, now if we just want to validate our opinion on that and take away some of the more opinionated piece, let's just come into the macro snapshot and come down. And if we just have a look for Euro Aussie, we can see it's tilted down here to a really very bearish. Okay, now this macro snapshot is obviously picking up trend, it's picking up seasonality, commitment of traders, retail positioning, and importantly, the macroeconomic data, that tier one data, consumer confidence, PMIs, GDP, inflation, and so on. Okay, and it's spitting out an answer here to say, yep, we agree with you, right? Euro Aussie is looking bearish for these various factors. So it's a nice little sense check just to make sure you're the right side of the market. Now, you don't want to take any of this for granted. You don't just want to see Euro Swiss very bearish and sell it. You need to do your background work to reinforce that opinion. Okay, so far we've got green lights all the way in here for Euro Aussie to look somewhat bearish. Okay, now following on from that, the retail sentiment, the positioning, really worth getting our teeth stuck into. We want to have a look and see here. We don't want to be in a crowded trade. Okay, so we see dollar Swiss right at the top. It's sat here, 91% of retail traders are long dollar Swiss at the moment. Okay, out of that, 42% of those traders are underwater. Okay, i.e. they are long dollar Swiss and the current price is below their entries. Okay, now we know that retail traders have a poor track record in financial markets. So if they are positioned 90% long, it's not a far leap to suggest that it's probably not a bad idea to look to be short dollar Swiss right now. So what I want to have a look at in here is just come back and just have a look through some of the Euro pairs and some of the Aussie pairs just to see how they're positioned at the moment. Okay, now Euro Aussie, here it is. It's a pretty even split at the moment. You'd say marginally net short, but 53%, so it's pretty neutral. Okay, 30% of those traders currently underwater. Okay, and those which are short, 14% of them underwater. So it's a pretty neutral. It's a pretty neutral stance in here at the moment, and I don't mind that. That's okay. That just confirms that we're not getting into a crowded trade, and we're not getting into a short where retail is 90% short. Okay, there are still 30% of retail traders in here which are long Euro Aussie and are offside. Okay, so there's the bigger proportion of retail in here is long and they're currently underwater. Now, if they decide to close those trades, we could see an even bigger acceleration and move to the downside. So the retail positioning here also supporting Euro Aussie to the downside. So we've got a really compelling argument in here. Okay, if we just put this into a little list in here, we can say the newsfeed is showing risk on flows, okay, and de-escalation. We have the interest rate tracker is supporting a hawkish RBA and a somewhat neutral ECB. They don't need to be dovish. They don't have to be totally opposing. It's just in comparison to the other. The City Surprise Index, we have Aussie data beating expectations and Euro data missing on those expectations. Okay, so clear tilt to the downside. And also now in the retail positioning, we have a 50-50 split with the majority of longs underwater, okay, losing money, putting themselves in a position where they're likely to want to close out of those trades to move away from that position, reinforcing the argument that this could then continue to go lower as we see almost like a panic sell from some of those traders. So we've got a great opportunity here to be short Euro Aussie. Now let's just bring that back now into more of a technical context. The trading suite is giving us the data and the information we need to recognize that Euro Aussie could potentially go down. Now let's have a look and see what the technicals are showing us. Now what we're looking at here is more of a swing trade. We've got weekly profiles in here. We've got some clear evidence to look to take this short. Trading up at the highs up here, we've got excess. Multiple TPOs, see those individual TPOs trading at the top of the week, suggesting aggressive sellers coming in and pushing the market to the downside. We have poor lows, multiple TPOs trading at the low of the day, supporting the argument that sellers have got the price pinned to the floor and buyers failing to show any clear aggression and intent to push the market higher. You can also see the trend of this data pushing to the downside. Okay, we are in a downtrend. Okay, I can see these profiles very simply making a succession of lower highs and lower lows. Again, just supporting that argument that sellers firmly in control at the moment. The value area has stepped lower. This is where markets are willing and believe is a fair price. Okay, so that value area has moved lower. If I just highlight it from here, we can see this was the value area from 2 weeks ago. Let's just change that to here. Okay, and now we're looking at last week. We can see that clear shift to the downside. And importantly with that, if I just mark out the lows from the last few weeks, white so we can see a little more clearly, okay, you can see that point of control and really the bulk of that value area from last week is trading in beneath those lows, okay, down here. So just real acceptance of those lower prices, clear intent and signal that those sellers are winning the battle here. Okay, so lots of indications for continuation to the downside. The challenge, of course, then comes when and how do we get into this? The first area of interest is this series of single prints through here. Again, let's just change this up so we can see it a little more clearly. Let's change that zone, it's a sell zone. Okay, so those single prints through there, really strong support and resistance. If we move back higher, up through there, we're going to come up towards the value area high and the value area low of the last couple of weeks. See that little junction point there, value area high of last week, value area low of the week before that. And also just below that, we've got this little area here, which is the value area high, the weekly low, might be worth creating just a little zone there, the weekly low, the value area high, and the point of control from last week. So we've got some really clear levels to potentially get our teeth stuck into here to look for areas to try and short Euro Aussie. Now what I've also got plotted on the candlestick chart here is you can see the implied volatility levels. Now what we want to be doing, team, is getting these levels synced up across your charts. You want to be able to see all of these levels on one chart. Okay, so let's just sync that across. There's that sell zone. I'm just going to have to change these colors so we can see them on the other chart. Let's just make them black. Okay, I want to be able to visualize levels which have come from the profiles, my technical levels, which are potentially going to provide me with my entries. I want to be able to visualize those on my candlestick chart. Okay, there we go. Right, so we can see now I've got some clear areas from which I'd want to get involved. Now, these trades potentially already played out. We're sitting here doing this video on Thursday, and we can see earlier on in the week, this market has already come off of that single print area perfectly, tried to break down below then this cluster of levels down through here, which is the point of control. Get rid of this. Okay, we've got the point of control from last week. We've got that value area high and the session low. Okay, and see the market just coming off that really nicely here. Now, shorts are still in play here, okay, but those levels have already played out throughout the course of this. But you can see how we've built the bias from the trading suite, and then we've used the profiles to create a technical bias. Of course, you don't have to use profiles. That's just my preferred measure of my preferred analysis tool. And then we've got our support and resistance and our potential entry levels coming from the implied volatility, which sits a fair way above where we are right now, and the other profile levels. Now, of course, the other option you've got to get into this is to use the calendar. Okay, now this morning for the Eurozone, we had a raft of data. Okay, let's just filter this so we can see this a little more clearly, and let's just filter it purely by Euro, and let's just go high impact. Okay, this is the data we had come out of the Eurozone this morning. We had a raft of PMIs, flash PMIs, so the nice timely releases, the earliest signal you can get for the PMI data. It's not a fully complete picture of the PMIs, which will come right at the end of the month, but it's the best early warning, timely snapshot of what is likely to happen next. You can see a raft, and most importantly for PMIs, the German and the Eurozone data is not only was it a miss on expectation, okay, but it was below that low forecast, that little lightning bolt showing us it was below the low analyst expectation. So really poor numbers coming out here out of the Eurozone. That was at 8:30 at 9 o'clock this morning, which also could have then given us the opportunity, it's coming down into a slightly lower time frame, to look for opportunities in shorts, in here. Okay, so we see this market rallied back up here around midday and has been knocked on the head and has been sold since. And you can have confidence to lean into that short position and look for a breakdown through these lows, because we have such a strong, compelling fundamental view. And also now we've got that clear miss and deterioration in the economic data, which will also be reflecting in the CESI. We see the miss on forecast and consensus being played out here with that value of negative 22.8. Okay, so really nice opportunities in here in Euro Aussie, piecing everything together that we've got within this trading suite, with a few exceptions. In this setup, we've had a look at the news feed, we've used the interest rate tracker, we had confirmed with the macro snapshot, we used the city surprise index, the retail sentiment, and the economic calendar. There's a raft of signals being used here to build a really compelling argument to be short Euro Aussie. Now that's the case for today, and as we sit this week, it would also have been the case for last week. And if we just look at the Euro Aussie chart, consistently trending to the downside here, based on a lot of those signals, which we've just looked at there. Okay, so piecing it together, not an easy skill, but it's going to give you a big edge in the market if you can build that nice, compelling, well thought out, well constructed view, get you into better trades, give you more confidence in those trades, and give you an edge over other retail traders in the market at the moment.